Chuck Robbins reported a good quarter and is optimistic for Cisco. We have to touch on the layoffs, obviously, because a lot of people being laid off. But Chuck, I have to tell you, it's been a while since you just told me, you know what, the customers are buying. They need our stuff, and we're ready. And this was you at your most upbeat, Chuck.
Yeah, Jim, first of all, thanks for having me. It's good to see you guys. You know, if you really step back and think about what's happened over the last 4 years, it's really hard to believe. But this past quarter is when we just exited the overall impact from the pandemic, the supply chain shock. You know, we went through this phase where our customers, they were absorbing all this equipment we shipped them, and we finally got through it. I mean, it's really hard. We were talking about it yesterday, and it's hard to believe this thing's been going on for 4 years. But we said 2 or 3 quarters ago we thought that would end at the end of Q4, which it did. And, you know, it's the order growth was great. We saw the demand return. We saw it across the board. And if you look at the last 2 years from a revenue perspective have been the 2 highest years of revenue we've had in the history of the company. So we had our best gross margins ever during the quarter. We had the highest sequential order growth from Q3 to Q4 we've seen in over 20 years. So it was pretty solid.
There were people who told me Chuck made a mistake buying Splunk. I happen to love CEO of Splunk. I happen to love what he's doing. And I said, I think this is one of the greatest acquisitions because security is really important. But more importantly, they were not able to get enough. They needed more scale. And you gave them scale. This Splunk acquisition well ahead of where you thought at this point, right?
It is ahead, and you're right. A lot of the things that we bring to them, number one, is scale of customer reach. They were very concentrated in a certain set of customers. Geographically providing international reach, the partner community that we have that they really hadn't established. So we have all of those opportunities. And we saw during the quarter, we saw roughly 10 deals that we've now closed with the teams working together, and it's only 4 months in. So you got to remember, we didn't even expect to close this deal until September.
Right.
And we closed it in March early. So it's running ahead of where we thought.
Right. One last question before we give it up to everybody. But I was not shocked that you had to lay off people. You made a giant acquisition. You don't need 3 people covering one account. I mean, this was not a sign of weakness. I thought it was done out of, no one wants to lose their job, and you don't like to lay off people. But it was done out of strength, not weakness.
Yeah, we never like to do this, Jim, as you said. But, I mean, this is about investments and efficiency, right? I mean, you have, as I said on the call, we shifted hundreds of millions of dollars into these fast-moving markets. I mean, if you look at what's happening in the web scale space with their demands, every customer has a different set of features they want. Every customer wants a different silicon to be designed. So we had to invest more in silicon to run parallel path development. We've had to invest more in software development for the different features that each one might want. We're working on the NVIDIA solution that you talked about earlier that's not in market yet. The cybersecurity stuff that I said 3 quarters ago was going to ramp in the second half. We saw high single-digit growth in Q3. We saw double-digit order growth in Q4. That's without Splunk. And I said in 25 it's going to really start to kick in, and I think it's happening the way we expected. And security was strong, and so it was. Right now we feel like we're past the pain points that we've experienced, and demand should be normalized.
So you don't think there'll be future layoffs?
Well, it's really hard to say, David, what might happen in the future, but that would be our intent and our desire would be.
You talked about it as a reallocation as opposed to really cost of being driven by cost savings. At least that's what you said on the call. But I'm curious if you can sort of give us more sense there, because conceivably you could reallocate manpower without laying them off, couldn't you?
And we will do that. We will do that. We have a whole process that we'll go through where we'll do skills matching. Some of these people that are in that 7% actually won't leave the company. They will move into some of these roles if the skills match. We built this process over the last 7-8 years to try to make sure we're doing that. So that is the intent.
You're chair of the Business Roundtable, yes?
Yes.
So you talk to everybody with pretty high frequency. Do you think we're on the cusp of some broader layoff trend or cycle?
I don't think so. I don't think so. I think that, the big question that we talked about going into this is everybody going to think that this is AI-driven, right? I do think that the G&A functions can become more efficient. You can use that using automation systems. There is an aspect of AI that will go into that. But I don't think this is a sign of a bigger trend.
You talk about customers upgrading for AI and you becoming a beneficiary. I'm just wondering if you could explain, when you say they're setting aside money for AI to actually spend it on modernizing their infrastructure, what does that translate to when you modernize your infrastructure for Cisco?
Yeah, we heard this for the first time this quarter. We had customers telling us that they were actually upgrading their switching infrastructure, their enterprise routing infrastructure, their wireless. The data points we gave on the call, high single-digit growth in enterprise switching, enterprise routing, double-digit growth in wireless, $1 million orders in wireless was up 20% year over year. So they're just basically, they know that when they build these applications, they're unclear about what the traffic flows will be or what the traffic demands will be, but they're pretty convinced that whatever happens, I need to have the latest and greatest equipment in my infrastructure, and that's what we're starting to see.
Well, let me ask you, Chuck. I've been asking all CEOs this question. Which one do you use? Are you on Meta? Are you on Claude? Do you use Gemini? Do you use ChatGPT? And how often do you use them?
Oh, well, if you look at what we've done, we actually are using a lot of different ones. We created this $1 billion AI investment fund, and one of the things that we did differently is, in addition to investing in some of these players, we also wanted to build strategic partnerships with them. So we looked at them and said, what is your unique differentiation that we can actually go? So some of them might be better at helping us run language models that apply really deeply into customer service. So we have investments and partnerships with Mistral, with Cohere, with OpenAI, with Scale AI. So we're using all of them depending on what area of expertise they really have.